Good morning, this is Melissa with thestockswoosh.com and welcome. Today I thought I would do a precious metal analysis and review of these charts. They've been gapping and moving quite substantially in the last few days. And I just wanted to go over this because it's very interesting when I look at these charts what's happening here. I've had many people email me and had discussions about this in the trading room about what's going on with this sector. So let's just go over it. There's a lot of different symbols and ETFs in this sector. We're going to just go over a few. I could talk all day about the different ones. The main day that this sector gapped for the precious metals was Friday. And Friday was the day to really play these stocks as a day trader. This is GLD. And if you look at this was Friday. This was the gap that happened on Friday. This was the 12th. And it had a beautiful, beautiful, fantastic move on Friday. Now, if you played this as a day trader Friday, you made money on the short side, and it was a good gap. The whole sector gapped. This was one of those unusual things where not only does the gap end up being a good gap, but then every one that happens in the sector ends up being a good gap. And they all ran red on Friday in and of their own accord and together. And the charts were setting up so that was going to happen as well. This whole chart here, if you go back, has been trying to figure itself out since really the last year. GLD's had a nice run up. I mean, if you've been long this, or long gold, it's had a really, really nice run up for quite some time. Now, in the last year, it's had some dips and turns and tried to save itself a couple of times and really couldn't. But if you wanted absolute confirmation that it wasn't going to carry through higher, you got it. Okay, you got it on Friday. You actually got it before then. You would have known, I would have known the way that I read charts here. Okay, the fact that it couldn't get over itself here. But there were many down gaps throughout here that would have given you the sign. I can see this one right in here. And this one here. Actually, this one here never went over the high of that bar. Look at that. This one here didn't either. 5 cents. Remember, these are areas. You could have entered this as a swing short here or here. And here was the one too. Oh, here's another one there. Look. Look at that one. As they start to go down, they wiggle and jiggle a little bit as they're moving. However, the real biggie was Friday. Why was that gap so demonstrative? Well, you can see that prior to that, some investors might have thought that this was going to fix itself. Okay, fix itself from what? From being in a neutral trend. The stock hasn't, the symbol sector hasn't been in a downtrend, at least not this one. Some of the symbols have been, like IAG's been in a downtrend. We'll look at that chart in a minute. But this hasn't been in a downtrend in the last year. It's been in a sideways neutral trend. In fact, it's actually been extremely neutral. It was in an uptrend all this time, 08, 09, 010, 2011, 2012. It was sideways slash neutral, not even neutral bullish or neutral bearish, just basically neutral until Friday. Friday gave a clear direction that this is now changing on this chart as you read the price trend, that the trend now is down. Down, down, down. Since when? Since the day of this gap on Friday. This sector, all these gaps that had these gaps on Friday will not see the highs of the bar on Friday for a long time. You may as well just say forever. You may as well just say forever because it's not going to be for a long, 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 long time. Not days, not weeks, months or years, that any of these gaps are not going to see the high of Friday's high for a long time. So you may as well just say forever. That's why the whole idea of people wanting to buy this sector now, thinking they're going to get it on the cheap from this huge move down here that's happened just in 2-3 days, is completely ridiculous. It's making a new move down. It's saying, I am now going to go down harder, deeper, longer. Not carry through. This is not extended down. Now, I know from Friday to Monday, it looks extended in the sense there was a gap that was another gap down. So this was Friday, this was Monday. You woke up in the morning Monday. What caused this? This is because new people are more people sold out that created the gap down. And also this is shorting too. This Monday bar, after Monday's bar, I said, when I saw Monday's gap down, I said, let's just stay away from this because I want to see what this thing's going to do. And as the day went on around 10 o'clock, I said, yeah, they're lower now. They're all lower. They're really goners now. Why? Because this day people sold out. And then what created this gap here and this red day here was everything. Sellers and people actually shorting it. So if you look at the overall chart, the side of the power of where the large money is that's creating the trend is down. Selling and shorting now. Otherwise, it would never look like this. Now, this may wiggle and jiggle a little bit here, but it won't see this number for a long time. Okay? So this is not a buy. This isn't a downtrend. You could have entered this as a swing core trade short on Friday. That would have been a great play. Or even carried it overnight, knowing it was going to continue through the next day at least. I had no idea it was going to gap down this big though overnight and then still fall, which it did. Huge crush through. So someone was saying, well, why? Why is this happening? I don't understand. You know, why? You can look and look and look. Why? All I do is read the price of what's really going on and what it's telling me. The price is telling me that this sector now, for some of them have been in downtrends, but for the ones that haven't are now starting new downtrends as of Friday. So the money is selling out of their long positions and starting to short as well to make money on the downside. So this sector has performed for a long time. It has performed. It hasn't been performing now since the beginning of 2012. So at some point, investors that have large money, institutional money, hedge funds, so on and so forth, decide, wait a minute, you know, this is non-performance now, you know, and this sideways neutral trend now for a year, you know, let's sell out of the position if they're long still. They're waiting for it to go continue higher. It's not happening. This is non-performance for over a year. And so they're getting out. And now they're also shorting too, which is creating this whole thing and this next move down. And so they're going to take the money that they have to invest and put it in something else. And that's the only reason I can see what's going on with this here that's clear and evident to me is non-performance for quite a long period of time. That's a year. It's not like it's a week or something. Non-performance for a year, time to invest in something else. So let's look at a couple of these other ones. There's a few here. GDX even broke the low yesterday. This was another beautiful one. This one actually looks different than GLD, has been in a downtrend, for the last, I'd say 6 months, pretty clear. And the other one was the IAG, which has been in a downtrend too. And I played these gaps. I played these beautiful gaps when they've happened here. Beautiful one here I played. Beautiful one here I played. Every single one of these are golden gaps. And if you knew how to use my system, you would be making money intraday trading these as a day trader and also swing and core trade them too and know exactly where to get in and where it's going, to know the targets and how to play them. I teach a class called the Golden Gap. This is another beautiful, beautiful, beautiful example of the power of the Golden Gap system, of the power of the Golden Gap, of the power of everything that I teach. This whole sector is embodying right now the power of the gap and what I call the Golden Gap, because all of these are golden gaps that have set up here to make money, including the one on Friday, and you can learn how to trade and rate these to play them, and specifically to do them even for the longer term moves of swing and core trades. And that's what's so great about this. People just don't understand. They think that this is a buy down here because of the gap down that happened on Friday or Monday. They think it's extended. How can it be extended? It hasn't even barely started the downtrend. Extended, look at it. This is neutral. It's been neutral for a while. It's just started to make the turn. This is not extended. Extended is something's been running down for a long time, and then it gaps down again really big, and then it's extended, but it's still in a downtrend anyways, even if it rallies on that given day. This isn't extended, isn't gone anywhere yet. This is one very important reason to take my gap class, is to learn how to read price action in charts. It's something that I'm very good at, and it's a reason that I'm good at trading, and it's one of the reasons why people like to come and learn from me when I teach my classes, because I'm very good at explaining this. and breaking it down for people to understand it in a way that they can make decisions, trading decisions in order to make money. And that's the beauty in the Golden Gap course. That's the beauty of my 26-point rating system. So if you are interested in learning how to trade gaps like GLD, GDX, SLV, any of the precious metals that have gapped lately, the golds or silvers, then please contact me. The next gap class is April 27th and 28th. My email is melissa@thestockswoosh.com. You can email me there for more information. I hope that you've learned something today looking at this precious metal sector. They are on the move down. They are not buys. And it is not a correct way to trade to buy something that is in a downtrend. You wait until it does a bullish gap to correct itself. But these things aren't going to do that. They just did bearish gaps that are breaking full on now. Full on. In fact, let's just look and see where these things could go. These things can go pretty deep in here. Yep. That gap from Monday, the Monday gap, not the Friday gap, the Monday gap was serious business here, the way this gap held here on the day, because that was confirmation in a brand new move down. I knew this when I saw this because I understand what I do. And this is another reason to learn how to trade gaps and take my class. If you rated this gap and knew this gap was good or knew how to read charts, you would have been in this core short here at a price $10 better than here. You would be up money when you rolled out of bed Monday morning. Huge. $15, you know, or more, taking this at the top on the day of the gap. I'm playing it for a day trade and then getting out some as a swing trade down here, because this is a beautiful move, and then holding the rest for a core move. Really serious money to be made in this sector if you know how to trade it. So that's a reason to sign up and take my class. It's April 27th and 28th. If you're interested in more information, email me at melissa@thestockswoosh.com, and have a great day, everybody.